Good morning and welcome back to Almus Market Mornings. One of the biggest updates on the war front is the release of the MOU between US and Iran by various sources. Now, this isn't official, but has been released by various news sources, including Bloomberg. And it's pretty interesting read because while it says Iran will not develop nuclear weapons, it also says that there is a rehabilitation plan which will be drawn by the US and its partners, along with a $300 billion in financing. All sorts of sanctions and fund freezes will be released. In essence, it definitely seems to me, at least, that the MOU is quite in favor of Iran and its future development. Moving on, central bank actions remain in focus. Yesterday, while the BOJ hiked rates by 25 basis points, RBA was put. We shift our focus to the FOMC meeting, especially under the new chair, Kevin Warsh. Rates are expected to remain unchanged. Good morning, JK. What do you make out of this MOU that has been released and your expectations from the FOMC tonight?
Hey, good morning, Swaraj. The draft agreement is quite comprehensive. It is actually envisaging permanent ceasefire, then the reopening of Hormuz Strait, large-scale sanctions relief, and economic support for Iran in return for a nuclear restraint and a commitment to negotiate a complete settlement within 60 days. Of course, many experts say that the agreement is heavily loaded in Iran's favor, at least in the initial phase. However, it depends on how they respond in respect to the key issue of longer-term nuclear commitments, which the US values as the highest priority. So, in any case, Trump said the deal, or rather the MOU, will be signed on Friday. The Swiss government sources also said the signing event will happen on Friday. These statements, and of course, Trump also said the strait will be open fully on Friday for free movement of ships. So that was a big boost for the markets, and for the oil, of course, it was a slump of 5% in yesterday's trading that led everything else also to gain. Now, while all this is happening, Israel still remains a wild card, as Netanyahu is likely to retain the option of independent military action if Iran rebuilds its missile program or supports the regional proxies, the militant groups. In fact, several Israeli officials have explicitly stated that Israel does not consider itself bound by the US-Iran agreement, particularly the provisions regarding any military action by Israel in Lebanon. And they say that Trump's agreement does not bind us. Israel is an independent and sovereign country. So that's something that we need to keep an eye on, what actions happen between Israel and the other militant groups, particularly in Lebanon, that could actually see some volatility in the market. But even I feel the final term sheet, specific term sheet, and not the headline MOU, which contained a lot of details, will determine how this ceasefire will hold. On one positive side, Qatar is planning to rapidly boost its LNG production once the Strait of Hormuz is restored. They say that within 2 months, they will be restoring to export capacity 50% in a month and 80% within 2 months. And that's a good news for gas importing countries, particularly for India, which of course has managed the entire situation well, very well, in fact, over the last 3 months. And this comes as a big relief to us. And, that should also reflect in the market moves. Now, moving away from this Iran-US issue, we have a lot of central bank actions that was seen not only yesterday, but will be seen tonight as well. Australian Central Bank held the rate unchanged as expected. But they also acknowledge that financial conditions have tightened meaningfully and that economic growth is slowing broadly as expected. They also don't, rule out further policy restraint if the underlying inflation remains elevated. So it's in effect, it's a wait and watch situation. We had the Bank of Japan meeting also yesterday, where they hike the rate by 0.25% for a level of 1% that is not seen since 1995. And also they want to reduce the taper. In other words, so they will not, leave they will leave more money with the market going forward. So that's kind of compensating, slightly compensating, I would say, for the rate hike that they have done. In the meantime, the LDP government is continuing to focus on whether to cut sales tax further, and then there will be fiscal pressure. Yen is already weaker. Just to have a perspective, in 1995, when the yen, it was rates were at 1%. The yen was at much stronger level, and today it is at 160.72. Even as the rates have come back to 1%, there is a deeply negative real rates in Japan, which actually requires them to hike more. But they will definitely approach a gradualistic approach. That's something that we will have to contend with, and that will also lead the yen to see more weakness, but of course in a gradual manner. Now the focus is, of course, on the Fed meeting tonight, where they are not likely to change the rates. That's a universally expected outcome. However, whether they would turn a bit hawkish or maintain the easing bias is something that we need to see. The new chairman also wants to trim the balance sheet further, but whether he can carry the members in this regard, because he is always in favor of lowering the size of the balance sheet of the Fed. So we have to see how he carries the members along with him. Points to note while Fed considers a rate stance is that the job market is definitely much softer below the surface. While we had strong NFP, other indicators were softer. Jobs data showed openings were higher, but hiring was much lower. So openings are there, but they're hesitant to hire more. Challenge job cuts showed higher retrenchments, and 2 weeks of data showed jobless claims increasing substantially. Markets are in a euphoric state, yet tech sector valuations have been on the higher side. Any hockey stance could suddenly puncture these rallies, and we could have some sort of a market turbulence. And of course, the bond market, although it has eased after the oil price coming off, the sustained inflation at a higher level, well above 2% target of Fed, should probably be another factor they should consider before they decide to continue the easing stance. So it's, the arguments can be made for both ways. That's why the market looks at how Kevin Warsh approaches the whole thing, and carries a team or the board with him, a majority of the board with him. So that's the interesting point. Of course, summary of economic projections will also be on the watch for the market as well. Dollar still steering within the range. Euro pushed up because of the easing in the oil prices, which is a big relief for the Eurozone economy. And of course, ECB members have been vocal about more rate hikes because the broad-based inflation is there. For rupee, again, we saw a test below 94.50 yesterday, but oil buying was substantial. That absorbed a lot of selling. For the first time, of course, we did hear the selling was more from the market, particularly for the bond market. Bond market has seen nearly 3.5 billion of inflows this month. Of course, offset by FI outflow for equities. But in the last 2 days, what I've seen is a very insignificant net outflow has been seen. We'll have to wait and see because, for the amount of inflow that the market has been expecting, we haven't seen any sizable selling so far. So this means that, rupees yet to see its real appreciating trend. And now that the global and domestic situations are remaining favorable for the rupee, and the stock market is showing really good setup for a further rally. we could well see the rupee appreciate quickly towards 94. Of course, there could be some hesitancy of the market to push it down before the Fed meeting. But eventually, even if we do get a retracement towards 94.80 or 95, we see more selling to emerge. And I think way for 94 or slightly below that is definitely clear for dollar rupee. Thank you.
Thank you, JK. And yes, I think the global scenarios, how they are building up, it's quite positive. India and the rupee and the index, of course, because one of the major headwinds for us were the oil prices, the shortage of LNG. All of it seems that in time it will be resolved. So there's a bit more certainty over there. So that's quite a bit of sentiment positive that we will be seeing. Yes, so apart from that, globally now the focus will turn to the Fed meeting. They are unlikely to change rates, but whether they would turn hawkish or keep an easing bias is something that will be closely watched. How Kevin Warsh collaborates with other Fed members and how he carries the Fed. That's also something markets would be closely watching because the sentiment is quite positive, especially in the US markets. Must have seen now, even after the SpaceX IPO, we are seeing a continuous sort of rise in the stock prices over there. So there's a lot of money in the market and people are chasing those things. So we'll see how all of that pans out. That's it from us today.
Uh, Swaraj,
Yes.
SpaceX market cap briefly surpassed even Microsoft's yesterday. Yeah,
It's really
some sort of a
something,
record. Yeah.
yeah, some sort of a record. It's continuously.
Mm.
Apparently, 4,000 people who are working in
Mm.
SpaceX have become millionaires,
Wow.
including
Okay.
people who are working in the cafeteria. They had been given ESOPs.
Oh,
So
okay.
it's really done quite well for the people as well who are working over there. Yes, folks, that's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.